Hi there, it's Justin Lubino with Senior Advisors, and I wanted to create this short video to help explain how the Part B premiums and the Part B IRMAs, or income related monthly adjustment amounts, and also the Part D, as in drug IRMAs, work. So you understand if you happen to be in a higher income bracket, how much you're going to have to pay the government for your Medicare coverage. This first slide discusses the Part B premium. So if you're in the base level income bracket, none of this presentation really applies. If you're in that base level, it's less than 85,000 for single or 170,000 for a joint tax return, and you would pay the base level, which next year is $135.50 per month. However, if you're in a higher income bracket, you can see there's 5 additional tiers. You're going to pay more to the government for your Part B premium. It's called the IRMA, or Income Related Monthly Adjustment Amount, is the incremental amount that you will have to pay the government. So, for example, if you're in the top income bracket, above 500,000 for single or 750,000 for joint, you would pay 460 a month to the government just for the Part B and Part B IRMA. There's also an IRMA, or income related monthly adjustment amount, for the drug coverage, the Part D plan. So if you're in one of these higher income brackets, in addition to paying the monthly premium for the Part D drug coverage, which you pay to the insurance company that's covering your Part D plan, you also have to pay the government an IRMA, or income related monthly adjustment amount, for the Part D coverage. So, for example, if you're in that top income bracket, again, you're going to pay an additional $77 a month per person to the government for the Part D drug coverage. So if you sum up both of those numbers for the Part B and the Part B IRMA and the D IRMA, this shows you what the total amount per month that you would pay to the government for these income brackets. So again, if you're in the base level, you don't have to worry about these IRMAs. You're just going to pay the government the $135.50 per month. If you're in a higher income bracket, you're going to pay the higher amount. So this is just the total of the two numbers on the prior slide. So if you're in that top bracket, again, the Part B is going to be $460 per month, and the Part B, including the IRMA, and then Part D IRMA is $77. So if you add up both of those, you get the $537.90. And each of those other tiers works the same way. You're going to pay the Part B IRMA, and the Part D IRMA. Now, if you're already taking Social Security, these amounts will be deducted directly out of your Social Security check. If you're not taking Social Security, you will get a quarterly bill from the government for these IRMA, for the Part B premium, as well as the IRMA amounts. Generally, the first bill that you get when you sign up originally for Medicare only includes the base Part B premium, and then when you get the second bill, they back bill you all the IRMA amounts for the prior months that you already paid for, as well as the future months. So unfortunately it's not a very clean process, and the bills are very confusing. But the amounts that you owe are based upon the numbers we just went through in this presentation. Now, the question we get a lot, two questions really, what income are they using to determine my 2019 premiums? Well, the government's using the last income amount that they have, which is filed from 2017. It's basically 2 years prior, because we haven't filed the 2018 tax return yet. At the end of 2018, we filed that in 2019. So it's always about a year and a half to 2 years behind as far as the income that's being used to determine where you fit into this table. Now, because of that, the government understands it's a flawed system, but it's the best they have because they don't have your most recent income numbers. So if you had retired since 2017, or you had a windfall in the prior year, you can actually appeal these IRMAs. So when you get the letter, which comes about a few weeks after you sign up initially for Part B, and then also each year in November, December, you get another letter about these IRMAs. you have a 60-day window to appeal. You can appeal these higher amounts if your income for 2019 is going to be in a lower income tier. You can have those IRMAs removed or adjusted down to the correct level based upon your 2019 projected income. So we definitely recommend doing that if you did retire or if you're going to have lower income in 2019. You'll save a significant amount of money if you appeal those IRMAs. Now, if you're going to make that same income again in 2019, you can't appeal, because that's what you owe for based upon the income. So that's one question we get. Another question we get a lot is what is the income that's being used, and it's called modified adjusted gross income, or MAGI. And I'm not an accountant, so you should definitely double check with your accountant for the tax advice on how that is calculated. But the information that we found on the calculation, it starts with the adjusted gross income, or AGI, and that's a number at the bottom right of your page 1 tax return, and it's from 2 years prior, as I just mentioned. And basically, there's certain deductions that need to get added back in to the MAGI calculation. So the AGI will never be the MAGI will never be lower than your AGI because you're adding back in certain deductions. It could be the same, and in a lot of cases it is the same, AGI and MAGI. But if you have any of these deductions, they will get added back into your MAGI, and it could, essentially put you into a higher bracket for the MAGI versus the AGI. So anyway, the MAGI is what's being used to determine where you fit in to those income brackets we just reviewed. And again, roughly, this is how it's calculated. So if you have any other questions, you can give us a call at the number you see below. And I hope everyone has a great year, and take care. Thanks.